and its name is Marko.
Hi everybody, welcome back to a special edition of Hoot Loot, a Fireside Chat edition as a matter of fact, and all we're going to do today is update last week's recently released show, which goes into great detail about the coming or the anticipated tsunami, financial tsunami. The clock is ticking. The clock is ticking. This is still the fact zone. We're just going to try to reach as many people as we possibly can with information that is critical to be known in order to make a reasoned decision. And you can't make any kind of decision when you're being fed propaganda and misinformation, as we pointed out in last week's show. Shadowstats.com does a great job of breaking it all down. So you're still in the fact zone. This is still going to be brutally honest. You're still going to be amused, be informed, and never be misled. Okay? And we're ever so grateful for all the new subscribers that are starting to pour in. Thank you very much. And what I'd like to say is that this is going to be a very succinct show, a very clear show, an attempt to really bridge the lack of understanding and go past the propaganda people that are intentionally misleading you into hating each other. That's wrong. It's got to stop. And we're going to go right to the charts without any further ado. All right. So that being said, the other thing I want to mention is that we're sitting on a powder keg. I don't know how many problems there are out there. It's overwhelming. There's threats of war here, there, everywhere. There's financial collapse going on. England has had a pension problem. We have pension problems here too. We have overpromised and underdelivered, and now we are paying a huge price for 50 years of mismanagement by that wonderful group of people known as professional politicians. Now, I want to be very politically correct before I move on, and they are, we're going to use the PP word instead of the real word because we don't want to hurt their feelings, and to be completely politically correct, they are PP word Americans, okay? That's the new way to be the most gentle and kind and not upset anybody for any reason. We would never want to do that. Everybody should always be pampered and coddled all the time. Okay? So with that, we're going to go to the first chart, which is, of course, the password, formerly known as Bitcoin. Now, I don't know how many times I've said and that this doesn't exist. I don't know how many times I have said, show me a Bitcoin. What is a Bitcoin? What does it look like? Let me see what it looks like. Okay? Show me one and actually transact with me. Let me hand you some cash for the Bitcoin. Okay? Proving that it exists. But I've even offered $1,000 for that and no one's taken me up on it. Because it doesn't exist. It's a fact. It's a fiction, a complete fiction. And, it's not unprecedented either. There was a time, around the time I was young, in the 1500s, or maybe 1400s, there was something called Dutch tulip mania. And a tulip became so highly valued that it was equal to a house. A tulip for a house. Okay, that's called the madness of crowds. And there's no limit to how people can go crazy. So, with even though this asset is non-existent and people are adopting it, there's no way to gauge how nutty it's going to be. I think there's going to be an aha moment coming up because it's just evidence that this is nothing is compelling. The fact that places have adopted it, so what? It's still nothing. It proves nothing. Okay, Sergeant Schultz would say on Hogan's Heroes, I see nothing, I hear nothing. Okay, that's really basically what we have with Bitcoin. And I'm sorry I went so long. I intend the show to be succinct. Okay, now ARK Innovation is also has just made a new low. This is the place where you go to find all your stupid stocks. And I can't believe this company continues to draw capital. I think it's starting to lose capital finally after 80% of the money has been lost and people have doubled down and doubled down and doubled down and lost more and lost more and lost more. I mean, this is the epitome of memes, as they call them, to be polite, but really are stupid stocks. And those are overhyped, overvalued, ridiculous business plan type stocks that people have to suspend their disbelief to buy the thing. Like Peloton, stationary bicycle maker, is suddenly worth a fortune. How on earth did that happen? All right, so Microstrategy is the next chart that we're going to show here, and Microstrategy is yet another example of the madness of crowds and stupidity gone wild. This is run by a man named Michael Newtown Saylor, who is a former CEO, but still is under the influence, if you know what I mean by that. Okay? He's under the influence. And the company is under his influence. So what are they doing now? They're actually issuing $500 million worth of stock and using it to buy more Bitcoin. Now, as stupid as that is, they have bonds that are coming due really soon, and they have to somehow find a way to pay for them or to reduce the debt liability. They're not going to be able to unless they start now. They're not making any money. They're losing money with this ridiculous Bitcoin, fixation. And, they're going to be forced to sell it. That's all there is to it. And raising $500 million does nothing for you. It dilutes the shareholders anyway. So you don't end up better off. What ends up happening is you dilute existing shareholders. And you miss an opportunity because your debt is trading at a big discount to par because it's so risky because of Michael Newtown Saylor and his fixation with Bitcoin that, it's just ridiculous. All right. Tesla is the last of the canaries in the coal mine, and Tesla finally is about to bite the dust, or has bitten the dust. It is joining the party. The party is almost unanimous right now. Last week we talked about oil companies. I have to retract that, and I'll show you why. There was an incredible reversal Friday, and some things just reversed so much that it's now looking really high probability. The crash alert that we've been talking about is still elevated. It's still highly risky. It's still there's still time to protect yourself. We're going to show you how. Okay, so after Tesla, we have the Nasdaq 100. Now, if you look at the Nasdaq 100, it is in a massive rounded top, but it's going to make what's called a round trip. A round trip means that it goes all the way up and all the way back. And all the way back is our target of 5,500, which we just revised because the rounded top has gotten bigger, broader, and has lasted longer. Has more power in it now. And what you'll notice is that Nasdaq has also joined the party finally at long last. There's going to be, and next we're going to show you exactly what a rounded top is, or a round trip is. This is plain and simple. Round trip, where you end up where you started. You end up where you started. That's a round trip. That is what is going to happen to practically everything on the market. They're going to have a round trip, and no one will end up making money other than people who know what they're doing. And right now, I don't even know what I'm doing. So it's really treacherous out there. The S&P 500 is also going to make a round trip. So we have a target of 2,400, and that represents a third lower from its current place. A third lower. The reason we're talking about 1/3 lower is because the big cap-weighted stocks are the ones that are giving up, gasping their last breath, and finally going, ugh. We're going to show you that too. Okay? Now, the market has various patterns that repeat. Okay? What you're looking at is a sawtooth pattern. Okay? A series of spikes higher in a bull market, followed by a flag or something like that, or triangle, a flag, usually descending, going against the main trend, followed by another, followed by another, followed by another. Then, at some point, there's a sudden reversal. The market can't go on forever. It has to have too many people are buying into it at that point, and there's no one left to buy. So it goes through a sudden reversal, and it does the same thing all the way down. So you have a sawtooth pattern, and you can even have what's on the next page, a sawtooth pattern within a round trip. Okay, that is, I'm seeing that all over the place, all over. I was seeing it all over. The situation is, I'm trying to simplify as best I can so that you understand as best I can articulate and understand what we're doing here and why charts are your friends. They're not anything to be feared. They're your friends. They tell the truth. Okay, they tell the truth. You know, this is money flow. These are people making real-time decisions with their money, not what they talk about. What they talk about is irrelevant. It's what they do that's relevant. And these charts are your friends because they show you money flows, and therefore you know it's relevant. Okay, next one is tips, Treasury inflation protected securities. Again, this is somewhat surprising, but you can plainly see that the inflationary expectations are going down, and they're plummeting. They're plummeting. They're literally plummeting. Oil has reversed, among other things. I have another version of it right behind it, or right next, and this is the short-term tips, or Treasury inflation protected securities, and it is plummeting again. I mean, that is a big move. You know, that's a big move, especially when you're getting numbers that are high. You know, it's very confusing, but there is a method to this madness, I assure you. Okay, now we got the U.S. dollar index. This is the exact same chart from last week. It tries to explain the impacts of the dollar, and you see it, this parabola, this incredible advance, this surge, and it's doing exactly that that's written on the page. It is wreaking havoc. One thing is pointing out how that while we're a basket case full of ticking time bombs, okay, full of ticking time bombs, Europe is even worse. They are a complete and utter basket case. And that's why this thing is going up like crazy. And it's having a not great impact, believe me. It helps the Fed a little bit, but the Fed's already irrelevant anyway. So, all right, now what I'm going to show you now is we're going to explain a yield curve to you, and we're going to show you different maturities, beginning with the 3-month Treasury, which is the shortest term Treasury bond there is, and we're going to show them. It closed at about 3.6% on Friday. Okay, the 1-year bill is the highest. The 1-year bill is the highest, 4.50. Okay, we are now at 4.50 on the 1-year bill, and the 2-year is 4.48. All right, now you're in a horrible situation that goes something like this. We have too much debt. We can't pay it. We could never pay the debt back. Never. It's $31 trillion. Trillion. The only resolution that is even possible is everyone's got to take the pain equally. You know, we lent the money to ourselves. It's not even China or Russia that's selling our debt. We're the ones that buy it. For Social Security, other government agencies, we're the largest holders. And we're lending it to ourselves. Stupidly, we're lending it to ourselves. What we're doing is taking it from young people, okay, who are born with $150,000 liability the minute they're born because of stupid government promises that they can't keep. No wonder they're pissed. I would be too. Anyway, the 5-year bill followed by the 10. Now these are the important maturities, and the 30. So I'm just flipping through them real fast here, and we're now going to present the yield curve explained. Making it really simple and showing you in very clear terms how bass-backwards it is. Now, if you look at the you look at the yield, the part of it that's in blue, it shows what we are today. That this is real-time current, and there's a yield curve inversion. What that means is the 2-year is greater than the 10-year. That's an inversion. Okay, an inversion is really a very bad sign. It's a bad sign because it's right a lot of the time, and it's also its lead time is variable. You don't know how much in advance it's warning you. Well, I do. We're already in a depression, so any predictive value is really not there. The fact that it continues to be minus 0.50 at this time, and that's been for a fairly long time, is very troublesome indeed, because it doesn't look anything close like it's going to stop. It is making new highs every day, and the fact that it is making new highs every day completely eliminates the possibility of any further advance in stocks or other risk assets. It does. Interest rates are central to valuation. The higher the rate, the lower the value. The lower the rate, the higher the value. That's all there is to it. And right when you have a period like we are now, where markets are making, interest rates are making new highs, and you've had this bear market rally that kind of, has really been sharp and, somewhat, somewhat strange. But we had this incredible rally. I think it was on Wednesday or Thursday. 800 points in a day. A short covering rally. That's all there is to it. We're still fully in a bear market, and that's it. Interest rates are going up. Stocks can't go up. They can't. If they do, we're going to have an 87 style crash. What happened then? What happened then was merely a function of return overvaluation. Interest rates going up and stocks going up at the same time, and suddenly one day it all came crashing down and adjusted. And it only took 2 years for that, for the Dow to regain its prior territory. Whereas in 1929, it was entirely different. 1929, you had a period in which you would have lost more after the crash, lost more after than if you sold during the crash. Okay, more after. And it took 20 plus years to recover. 20 plus years. It also took the Nasdaq 20 plus years to recover from its dot-com bubble. 20 years. And then all of a sudden it's surging, and it's drawn a mania, and you know the rest. It's teetering on the edge of something really big. I don't know what's going to spark it. I don't know when exactly it's going to happen. It could happen as early as tomorrow morning. I don't know. I don't know if it's going to be a waterfall or crash, but I do know this. It's going to be a rough ride. And I'm sorry to say that. I really am. It affects me. It affects everybody. And I don't like being right about this, but I will be. And so I'm going to continue on here with Apple, and show you the best chart I could find. There's no better chart right now that looks healthier than Apple. And it doesn't look all that healthy, does it? I mean, it looks like it's about to break down, but it's the healthiest I could find. the healthiest. Okay? Now, compare that to Google, as I call it, Google. It's a French version of Google. And, or Alphabet. That would be the French version. Alphabet. Anyway, it's making a round trip, and, it's doing the sawtooth pattern, and it's inevitable that it will go round trip. And it's doing it right now. It's going to go down and make a round trip. They do that every time, or something close to it. The dot-com bubble, every time. Okay, MasterCard. Why am I putting this in? Because this is continuous confirmation that the consumer is tapped out. They've run out. They've run out completely. They've overspent on nothing practically, because we don't make anything anymore practically. And it's a really bad sign, as is Visa, that troubled times, bad times are dead ahead. These are as clear as can be, that troubled times are dead ahead. I don't know how dead, I don't know how ahead, but they are. Ethereum, I don't even want to talk about these anymore. I really don't. I am so sick and tired of being asked, do you know anything about cryptos? Oh, I'm making $8,000 a day. I still get that every damn day. Every day. Someone pretending to be an Asian, attractive, divorced, looking for a husband, female, approaches me, wants to make friends and chat, and then suddenly, all of a sudden, brings up WhatsApp and cryptocurrencies. Even though I've told them in advance, don't bring those up. I don't want to hear about it. But I still do. Thank you. And Ethereum, I'm gonna say this again. It's a .org. You read it on the sheet. You can't buy it. You can only buy something known as a token. A bus would not accept that token. It's practically valueless. Blockchain is so overhyped. It's not funny. Blockchain, it's like an abacus. It's that antiquated, I think. It's like an abacus, or something like that, or counting on your fingers and toes. All right. I put gold up for an important reason. I have been a permabull and wrong on gold forever. I've been wrong about this forever, and I continue to be wrong about it. But I have bought some recently. I bought coins, physical gold. I would not buy an ETF at all. I refuse to buy an ETF because I'm starting to get a bad feeling about digital cash, which I don't think will happen. I plan to talk about it today, but I won't talk about it too much. I will mention it today. I also plan to talk about the CCP and the Chinese Communist Party, but and their 100-year plan. But I'm actually more concerned about next year and surviving it than I am about something that's way off in the future. I just am. Things are really bad. I'm sorry to say they're bad. Okay, gold. You know why? I've done something that was tactical. I ignored the chart. It looks terrible. But I have to have control over some liquidity. I have to. And you should too. You don't have to buy a lot. You don't have to buy any. But I highly recommend it, even despite the bad chart, because it could suddenly, there could be some thing happen, some event that occurs where gold becomes the backing for some new dollar, some new digital dollar, something. I don't know. I don't think there's going to be a digital dollar, but it could be, the dollar could go through what looks like a corporate restructuring. And, you get pennies on the dollar for the dollar, okay? Where the Fed and the banks have control of your liquidity is the most at risk. Social Security is at risk because they can simply void and renege on their promises. They do it all the time. All the time. You can't count on them being honest or truthful ever. You know, if you had them as an employee of yours, you'd fire every single one of them. Okay, you'd kick them out the damn door and kick them in the pants. Yet they get reelected time after time after time and do the same stupid things, and they work for us, right? Supposedly, but they don't. You know, we work for them. We're their slaves. They're the elite. They're the rulers. We've got to understand that the enemy is not races between races. No. Those are our allies. The enemy is Uncle Sam. That is who we have to reform. We have to fire him. We have to get rid of them. We have to do it. And I'm begging you to do it. All right. Okay, finally, we're gonna show, one recommendation from last week. It's the ProShares Ultra. Basically, it's a double leverage inverse ETF of the Nasdaq, which is just broken down. It's making a perfect saucer pattern, and this thing could fly. And so we continue to think this could be a possible or probable recommendation, as well as the other indexes that have that we mentioned last week with double inverse ETFs, double leverage inverse ETFs. That was a mouthful. Thank you so much for watching. I really needed to do this tonight, and I'm so glad you were here. Thank you. We'll see you next time.